Hi guys, this is Hector. I want to show you a video about Intrigue Management, okay? And I'm gonna use one of my live trades, a trade that I took on the 17th of May, which was actually a few days ago, on the USD Canadian dollar, okay? I banked about can't remember, I think it was about 50 pips or something like that. Nonetheless, well, you can watch the video, it's uploaded on the weblog. But nonetheless, I don't want to talk about the actual trade. I want to talk about the Intrigue Management, and I've chosen this example because, well, I think it's a rather good example, okay? I traded this swing down, okay, the one I'm showing right here, from about, I think entry level was somewhere around there, and I exited somewhere around there or there, something like that, okay. It was about 50 pips more or less. Alright, so the entry was around about that level, okay. Let's zoom into, this is the 4 hours time frame, by the way, so let's zoom into the trigger chart, okay, the 1 hour time frame, and how to explain in detail these trades in trade management, okay. First of all, if we zoom out a little bit, we see that last week's low, okay, right there at about 110.00 decade number, okay, that was last week's low, and it was acting as sorry about that. It was acting as support before we broke below, okay, my entry was somewhere around there, then we retested not only the last week's low, but also the 110 decade number, okay. It's decade numbers are very strong levels of support and resistance, okay. Decade numbers are 110.00, 120.00, 100.00, alright, etc. So this level broke down in momentum, as you can see there, large red bar in the trigger chart, okay. After breaking it, we retraced, okay, back to that level. We retested it from below. We from there we broke the retracement trend line, and we continued making new lows, breaking yesterday's low and the day before yesterday's low as well, okay. So this level has been confirmed as resistance. Now remember all the three aspects of any breakout, okay, the breakout thrust, the pullback, and the continuation, okay. 1, 2, 3. Once all three have been confirmed, okay, have gone through, making new lows, okay, the continuation aspect of a breakout, scoring new lows right there, the breakout is confirmed, okay. This is what I call a breakout confirmation, okay. You can read all about it in the breakout section of the course, okay. Breakout, pull back to the breakout level, okay, and hold the retracement, break the retracement trend line, and continuation, okay, making new lows. That's a confirmation that the breakout has actually gone through, okay, has delivered. Okay, if this breakout has delivered, okay, and we enter right there or somewhere in there, I can't remember, and we've made we've confirmed this breakout, it is safe for me to move my stop down from here, sorry, that was where my stop loss was placed originally, down to here, okay, because this level of support, of resistance, well, former support, now resistance, has already been confirmed, okay. It's been retested and it has worked, okay, has held the bounce, okay. So now we can safely move a stop here. If price decides from here to shoot up, okay, and to breach once again this decade number, That means that the breakout didn't deliver, okay, and therefore I am not that sure I want to be in this position anymore, okay. What you want to see when you are riding a swing down, okay, what you want to see is the trigger chart breaking former intraday levels of intraday or intra-week, depending on the time frame you're working on. But nonetheless, you want the trigger chart to continue breaking and retesting former levels of support and resistance, okay, and confirming via the three aspects, okay, those breakouts, so you can trail your stop loss lower and lower and lower in case you never know when, like I say on my website, you never know when the swing might actually fizzle, okay. You never know whether you are riding the last swing of the trend line and it's just gonna fizzle out in the middle of the swing, okay, and price is gonna turn around and stop your trade out, okay. That's why don't hesitate. As soon as you see elements of weakness, don't hesitate to exit the market, okay. Not as much as in order to bank some profits, but especially to protect yourself from a trade that's showing some signals of weakness, okay. So we've broken this level, we've pulled back and confirmed, okay, the breakout. We've moved our stop loss here, okay. I moved my stop down up there. Look what happens next. We have a triple bottom here, okay, guys. You gotta read price action. The trading is all about reading price action, in my opinion, at least as far as my system is concerned, okay. Look at the triple. This was Friday's action, this was Thursday's, this was Wednesday's, and this was Tuesday's. All right. Well, on Tuesday, Wednesday and Thursday we found some heavy intra-week level of support, okay. We just couldn't break the 109.65 level, okay. Well, on Friday we finally break this level, okay, and it's once again the same story, guys. Breakout, retrace, pullback to the level, to the breakout level, and continuation. All right, making new lows, triggering new lows. This is another chance to move stop a few pips above this level, okay, say 5-10 pips above that level, okay. If price continues down and like I say shows some signals of weakness, okay, before triggering our final target, I think it was somewhere around there, my final target, before hitting our final target, okay, and turns around, you don't want to be in that position anymore, okay. It's just showing that momentum is fading away from this swing, okay. So don't hesitate to exit the market, bank some pips. We entered there, we've exited there, we've banked some pips, and moreover, what's most important, we've protected our position, okay. We are not going to let a winner turn into a loser. I'm sure you guys have heard that 1,000 times. It's one of the golden rules of trading, okay. If you have a winner in your hands, okay, if you are in a trade that's showing profits, that's showing strength, don't let it turn into a loser, okay. Exit at the first signal of weakness. Exit out, reassess the situation, and if you ought to re-enter the market, well, so be it. I mean, you're just gonna lose what, 3 pips of spread? That's not a big deal, okay. You can deal with 3 pips of repaying another 3 pips of a spread if the actual weakness wasn't such, okay. If it was just one small retracement, you can always re-enter. But by no means let a loser, become a winner and score a loss out of that trade. Get out, score some pips, bank just a few pips if it's necessary, but get out of any hazardous or jeopardizing situation. All right. So in this trade we had 2 examples of Intrigue Management, okay. Breakout of Intrigue Management, okay. Breakout of the decade number, pullback continuation, moving a stop down here to protect yourself, okay. And we saw the same thing a few hours later, breakout of the intra-week support level, okay. Pullback, retesting this level this level from below, and the continuation aspect. Okay, once again, the 1, 2, 3 aspects. Okay, we make new lows, and this breakout has been confirmed. All right, 1, 2, 3 new lows. This breakout is this level is safe to trail stop from first from here to here, and then from here to here. Okay, and finally hits our final target. All right, guys. Even if you even look closer, okay, we break this intraday support level, breakout, retrace, pullback, continuation. Once again, we could have moved our stop loss to this level, but I think I was already out of the position. I think I was already my final target had been triggered somewhere around there, so there was no need for this. But you've got to keep on reading price action. Okay, no, it's as long as the trade is open, follow the trigger chart and read what's going on there. You see, we've made an intraday. Remember that all this happened in the Friday section, Friday trading session. We move down, we break former lows. Okay, we retrace and retest them from below. Continuation, making new lows, move stop to this level. Okay, now we make a new swing down in momentum. You see this massive red bar? Okay, new swing down in momentum. We have a 1 bar pullback there. You see that green bar? Okay, to retest the former intraday support level. We retest it from below. It holds the retracement. We make new lows. Okay, and this level, as we make a new low down there, this could have been another suitable place to trail your stop. Okay, finally, whenever this swing just runs out of gas, which it does, eventually every swing runs out of gas, if it hasn't triggered your final full potential target, again retraces back, well, you know, you are stopped out here, you entered here, and well, you've scored some nice pips, about 50-60 pips in here. Okay, from 110.05 to 109.35. It's 70 pips. It's not too bad. All right, it's all about reading price action in the shorter time frames, okay, and managing the trade. You break new low, you retrace it, you confirm the breakout, okay, with a new thrust down, you move a stop down there. Another breakout, another pullback, you make new lows, well, you trail a stop down there, and so on and so forth. Okay, like I say on the website, it's much easier to read this off the longer time frames. Let's say you are in a daily position, okay, in a trade that's been taken off based on the daily chart. I just set out chart, okay, and you are reading price action of the 4 hours chart, okay, or you know, it's much easier to see price swings on those time frames than in the intraday time frames. Okay, you see how squeezed price action is there. Okay, you will actually have to zoom into the let's say, I don't know, the 30 minutes or even the 15 minutes time frame. Okay, to see those breakouts and those retracements. Okay, that's the 1 bar pullback that we just saw on the hourly chart. Okay, breakout, retrace, off it goes to the downside. So like I said, it is much easier to read all this to manage the trade you are in, if you're taking trades off the longer time frames. Okay, but nonetheless you can still do it. Okay, with if you read price action very finely, okay, you can still do it for an intraday trade. And like I say, it's all about protecting your position. Okay, don't let any weakness in the market, okay, don't let a winner become a loser. Don't exit at the first signals of weakness. If like I say, we broke this level to the downside, we broke this level to the downside, we pulled back and we had the continuation confirmation. Okay, if let's assume that that your final target is somewhere around there. Okay, if price upon having confirmed this breakout with the 1, 2, 3 aspects, okay, upon confirming, making new lows, that breakout, price begins to meander around, not quite showing any momentum to the downside, and sooner or later slowly begins to crawl to the upside again, taking you out here. Trust me, it's better to get out of the heat. Okay, if price is showing that the momentum is fading away, okay, and instead of continuing down, like in this case, this was a nice swing down, it actually begins to breach levels, okay, to the upside, levels, like I said, that were confirmed before. Okay, this was a confirmed breakout. The breakout of this level was confirmed right there. If upon having confirmed it, price actually breaches back up, this whole swing is jeopardized. Okay, in the same way, like I always say, if you have in the setup chart a trend and then you break the area of dynamic resistance and you get closer and closer to the 100, the whole swing is threatened. Okay, it's compromised. You can also have the swing, okay, each swing compromised if you, upon having confirmed one level of former support, now resistance, and having had the confirmation, if price actually breaches back up, okay, back up this level that was already confirmed, the breakout, if price retraces back up, then the whole swing is compromised. Okay, the whole swing is showing weakness and you want to get out of there. Alright guys, I hope you with this example you understood how to read price action within the swing, okay, once you are in a trade, and how to trail your stops, or how to actually readjust your stop loss policy in trade, okay, once the trade is open. So basically price doesn't turn around and bite you in the ass. Okay, alright guys, bye bye. Hi guys, this is Hector. In this video I want to show you what I usually call Intrigue Management. In my opinion, it's one of the most important factors when it comes to trading. Most of the people focus their trading decisions on all the process that goes prior entering a trade, either pushing the buy or sell button, okay, well, they basically set their stop loss, their profit targets, and basically they walk off the screen, they walk away from the computer, thinking that their job as a trader is basically done. Okay, I very much disagree with that. I believe that Intrigue Management is at least as important as the pre-entry management. Okay, if you've put so much attention before entering a trade, when you don't have your money rolling in the market, why should you just, like I say, walk away from the computer once you've entered into a trade and once you actually have your money rolling in the heat of the markets? Okay, it's, in my opinion, is, like I say, it's just as important to keep following the charts after having taken the entry than actually prior to that. Okay, in order to explain my points and the way I follow the trigger chart, the shorter time frames chart, in order to read price action for my in-trade management, I've decided to take one of my trades from my trading library. I'm going to record the whole thing again just because I don't want to focus on the actual trade. Okay, I want to focus on all the process that goes within the trade. Okay, all those elements of decision taking that goes within the trade from the moment you've pushed the entry button until you've exited the trade. Okay. In this case, it was a trade that I wanted to exploit basically this swing down. Okay. As you can see, it's as usual in all my trades, the moving averages are nicely pointing down parallel to each other in order, etc, etc, and I basically entered this I traded the breakout of this sideways range to the downside in the direction of the main trend. Okay, this is the trade I basically wrote. Okay, but nonetheless, like I said, I don't wanna focus on the trading itself, but rather on what happened within the trade. Okay, that's the point of this video. So that's what I'm going to be focusing on today in this video. All right. Okay, like I say, the entry was somewhere around there, and this is the hourly chart, as you can see in the upper left corner of the screen. So I'm going to be zooming into the 15-minute chart to show you what I was seeing as this trade was unfolding. All right. Okay, this is the 15-minute chart, the trigger chart. And this was the range I was talking about before. Okay, the breakout happened right there, but like I say, I don't want to focus on that. Okay, I want to focus on what actually happened later on. All right. So from this moment on, let me mark that with a small rectangular shape. Okay, right there. That was my entry point. And actually not that long after, about 1 or 2 hours later, I saw the price began consolidating somewhere sideways. Okay, forming a very clear price pattern. Okay, you probably may recognize it. Have a look here. Let me show you. I'm sure you're going to recognize this formation right there. You see that? It's a triangle, guys. Let me define it a little bit better. That's it. It's a triangle. Like I say, a couple of hours after I entered the trade, I saw price beginning to bounce up and down within this triangle formation. Okay, I'm gonna be honest with you, I did take some hit at this precise level, because this was my entry level. And well, basically a price was not quite moving in my direction that quickly. Okay, it began meandering sideways, barely 10-15 pips below my entry level. Okay, and when it comes to trading, I am very impatient. Okay, I am very patient before pulling the trigger. Okay, I don't have any problem being out of the market 1, 2, 3, 4 days, a whole week. I don't care if I don't see any trading formation that I particularly like. Okay, I have no problem whatsoever to remain on the sidelines, on the outside the actual market, as long as it takes. Okay, but once I am in the market, okay, once I have actually entered a position, I like price moving my way fairly quickly. Okay, this was not the case. All right, in this, like I say, in this case, we began meandering sideways within this triangle, and I was very ready. I was following this setup in real time. I was very ready to close my trade manually if this triangle broke to the upside. The reason for that is because one of my trading rules, okay, is to never let a winner turn into a loser. All right, at this precise level I was, like I said, perhaps 15 pips in profit, 10-15 pips in profit. The last thing I wanted is this breakout to break to the upside and shoot back up to entry levels, or perhaps, who knows, even beyond that. Okay, that's a big no-no when it comes to trading, in my opinion. Okay, the psychological damage of seeing a winning trade turn around and finally go to entry levels, perhaps beyond, even triggering your stop loss. Like I said, the psychological damage for that, it's quite devastating. Okay, you will see that whenever that happens, your entire day is totally ruined. Okay. And you don't feel like taking any more trades for the rest of the day, or perhaps the rest of the week. I definitely like to follow, like I say, the trigger chart, the shorter time frame charts, in order to spot these type of signals of weakness, okay, in my trade. And if I see that those signals of weakness confirm by having a breakout in the wrong direction of the market, I am very ready to close the trade manually right there. I'm not gonna give this trade any more breathing room. Okay, I entered there. It had like a couple of hours. It had a nice run to the downside. I was about 50 pips in profit at this point, but then it began to move sideways. Like I say, once again, I repeat, if this had broken to the wrong side, I would have closed immediately. Okay, perhaps for a small profit, or perhaps even for a break-even trade. Okay, it's very important, guys, to analyze what's going on. Once you enter the market, always analyze what's going on your trigger chart. If you like what you see, if you like that the swing you're riding still has momentum, is still carrying momentum, has some a good energy to the downside, or to the downside if you are short, or to the upside if you are long, just keep on riding it. But as soon as you spot any signal of weakness, at the first signal of confirmation of such weakness, be ready to exit the market lightning fast. Okay, it's best to close the trade right there for perhaps +5 or 10 pips, or even break even. Okay, just walk away from this trade. It just didn't pan out as expected, but at least you haven't scored any loss. Okay, that in itself is a win in itself. Okay, not long ago I read a quite interesting quote. I can't remember who said that, but it was very interesting, and it basically said that sometimes the best win is when you walk away from the battlefield with the lower amount of casualties possible. All right, it's actually true. Okay, you gotta know when to call it quits. That principle applies to trading, applies to business, applies to most of the things in life. Okay, one of the most important things, and actually one of the most difficult things, is to know when you've got to bail out of a situation that's just not quite looking as appealing anymore as it used to. All right, so in this particular trade, once this triangle formed, like I say, I had my mouse cursor on top of the exit button. Okay, like I say, I was very ready to manually close this trade. Okay, well, thanks God, it actually closed to the downside. Okay, that's always a good indication that the swing you're riding still has momentum. Okay, you've taken your entry, price goes through a moment of consolidation, but that area of consolidation breaks in the direction of the overall trend in the setup chart. That means that the swing you're riding still has some momentum left, some use to profit from. Okay, but look what happened barely an hour after that breakout to the downside actually happened. Okay, have a look. We had another triangle formation. Okay, let me draw that properly for you guys. There it is. That's it. We have a flat top triangle. Okay, you see that? We went through an area of consolidation. We were ready to exit if that area broke to the upside. Instead, it broke to the downside. We are still good to remain on this trade. Not too long after, okay, shortly after, we began meandering sideways for another 2 or 3 hours, okay, and that was another decision taking point in this trade. What are we gonna do here? Is it gonna close? Is it gonna break to the upside? Is this perhaps this whole swing down showing again some weakness here? If it does, if it's showing weakness, just exit here manually. Your entry level was around here, your exit level is around here. There is like 60 pips from entry level to exit level. It's not too bad, okay? It's 60 pips. It's definitely a juicy position, okay? It's a juicy profit from one single trade, okay? It's best, at least in my opinion, guys, okay? It all depends how aggressive you are, but as far as I am concerned, it's always best to walk away from a trade that is showing weakness, okay? It's showing some signals of weakness. With that breakout to the upside, it's just it's better to exit at a profit, okay? In this case, around 50-60 pips in profit, than actually leave the trade open and risk seeing those profits fading away, and perhaps, well, God forbids, but perhaps you might very well score a loss, okay? So like I say, as soon as you see those first signals of weakness, wait for the confirmation and exit out as soon as possible. Once again, luckily enough, this whole swing to the downside still carried had some momentum left, and it actually broke to the downside. I think I exited somewhere around there at this level. I can't remember exactly at what level I exited my position, but I think I had my final target at around this level, right? But nonetheless, once we saw this area of, like I say, decision-taking consolidation area broke to the downside, I knew for a fact that this trade was going to be a winner, and my final target was going to be met. What's important, okay, the lesson that I want you guys to keep in mind from this video, it's how utterly important is to read price action in the shorter time frames once you are in a trade, okay? Please don't make the mistake many newcomers make, okay? Don't think that your job as a trader, once you enter a position and once you've set your stop loss and your final target, don't think that your job as a trader is done, okay? That's not, it doesn't work like that. You still got lots of things to do, okay? Remember that you, at that precise time, once you have entered, your money is at the market, okay? You're risking your money here, and you definitely want to be paying extra attention, okay? Even more so attention than before entering the trade, okay? Intrigue management, like I say, is crucial, right? So once again, I'm sorry to repeat this over and over again, but it's just so important. It's crucial, okay? Once you are in the trade, read price action in the shorter time frames. Read probable potential sideways channels, okay? Triangular formations, and verify that those areas of consolidation are breaking to the right side, okay? If they break to the upside, do not hesitate. Don't, there is no shame in exiting a trade before you are meant to, okay? As long as you are seeing some signals of weakness, it's always wiser to exit perhaps at a break even, or perhaps, who knows, perhaps few pips in profit, okay? Score bank those profits, and well, basically clean the chart off any trend line, any line, and begin all over again with your next setup, okay? It's important. And also remember that if the breakout of those consolidation areas actually happen to the right side, to the side you want them to break, okay, it's a nice opportunity to trail your stop down, perhaps either to break even or perhaps to these a few pips above these former highs. Okay, that's why it's so important to read price action in the very shorter time frames, because like I say, not only it's going to save you from winning trades that may turn into a loser by exiting those potential losers in advance before you actually are taking some major hit on this trade. Okay, so you exit there, perhaps 5 pips in profits, perhaps break even, it doesn't matter. You didn't this trade is turning into a sour trade and you've scored no loss. That in itself it's a success. Okay, that's the first reason to follow price action very closely on the shorter time frames, but also in order to trail your stop loss down further, you know, to protect your position even more and more and more. For example, once we had this breakout to the downside and price began meandering once again, okay, once you had the breakout to the right side right there, this was a fantastic opportunity to move stop right above this previous high, okay, this level right up there above the triangle, the flat top triangle top right there. Okay, you enter this area of consolidation, it broke to the right side of the market along with the major trend, and you by this time you know that this swing still has some momentum to the downside. Good. If your final target is down here, let it run, but be sensible, be wise, and don't leave your stop loss unmoved. Okay, trail your stop loss down here. If price from here decides to turn around, making new highs, taking out these previous highs, this previous area of consolidation, okay, you know that you're gonna exit. Okay, you are seeing some signals of weakness in this swing and you don't want to be in this market no longer. Okay, at least by having protected your trade and by having trailed your stop loss, you've scored a winner. Okay, you've reduced your risk and basically you've done a good job as a trader. All right, so please guys, do follow the trigger chart once in a trade and search for these range these areas of consolidation, and keep an eye whether they break to the right side of the market or to the wrong side of the market, and act accordingly. Okay, if they break to the right side, trail a stop down. If they break to the upside, simply exit as soon as possible. All right. Okay guys, that's all for this video. I hope you find this lesson interesting. If you have any question, please don't hesitate to drop me an email. All right. Okay guys, bye bye.